more of a micro perspective on some opportunities with some of the clients that we work with, such as Ema, Damak, Nikhil, who are the state-sponsored developer over there. So we'll talk about Dubai. We'll talk about the advantages of Dubai, what we believe to be or perceive the advantages to be, and then we'll talk about some opportunities. But I think it's really important that, from my perspective, from the family over here in Hong Kong, it's also something that I'm considering as well. I was just talking to a couple of my friends and clients as to the reasons why. Strategic location for business. I think most importantly, a third of the world can reach Dubai in 4 hours and the rest can get there in under 8. So you're not in the Far East or the Far West, you're really geographically in the centre. And that's what Dubai was going for when they created the big airport hub. And obviously Emirates were going for to be a hub from places like Australia into Europe, but also from South America into Europe and beyond. So that is a huge salient point. Its population is increasing by 10% annually. Now that sort of touches on what I spoke about earlier with instability elsewhere in the world. We don't need to talk about those things today, but you all know what's going on around the world and how that's creating issues for capital transfers and also capital preservation. So usually in cities and jurisdictions where populations are increasing by 10%, capital gains follow, right? So the most important things for me are the top two, but equally, it's a stable and dynamic economy. It's easy to start a business. It's easy to conduct business. People there are educated and ambitious. The government backs that education and that ambition with huge infrastructure projects. And again, we can talk about them a bit, but it's probably better to have those conversations further down the line. The Jumeirah, Palm Jumeirah, the Palm Jebel Ali, which is the new construction going on down the coast, the world, the Burj Khalifa, that is on and on and on. And this is endless support from the government, which is, like you see in places like Hong Kong with infrastructure like the Airport Express. The backing from the government is very important. And then a good segue from the Airport Express is, of course, the fantastic transportation links. Now, whilst most people drive in Dubai, there are opportunities not to drive in Dubai, and it's very well catered for both tourists and locals. The most important part, I think, is the population. Now, it's predicted that the population will be 7 million in the next 10 years. It's currently 3.5. So that's a pretty impressive jump in terms of people, and they all need places to live, whether they rent or whether they buy. So whilst Dubai has gone up 10, 15, 20% in the last year, or perhaps more over the last couple of years, you certainly haven't missed the boat, in our opinion. Okay, so the Dubai city layout. As any of you will know, if you've been to Dubai before, you probably won't need to see this map, but some people may. Now, it's really, in my opinion, split into 3 areas. And obviously, you've got Dubai Southwest, which is the Jebel Ali, which is the new farm, which is under construction. And there's a lot going on down here, such as, Legoland theme parks and various hotels and resorts. And it's exciting. It's actually where I stay, and I've got 3 younger children under 5, which is a nightmare. But it's okay if you can take them to somebody like Legoland. And it has really cool theme parks and entertainment hubs like that, just because there's so much more space there. Then you have Dubai West, a huge amount of tourism. The most affluent and arguably most expensive and sought after part of Dubai, which is the Palm. But also where Savills' office is. And then you've got Dubai Central, Business Bay, downtown Dubai, the tallest building in the world, Business Bay, the harbour, and all of the other commercial that isn't in Dubai West. Now, Dubai Southeast is home to most of the golf courses and places like Arabian Ranches, Damak Hills, some of the developments that I would, associate with perhaps Hon Lok Yeon in Tai Po, big, high-end developments that are safe, secure, with facilities, but they're out of town. So you take a half-an-hour drive back into town. Something like Hon Lok Yeon in Tai Po is a great example of what would be in an area like this for a Hong Kong investor. Obviously, it's a lot newer, it's a lot more modern, it's a lot more Dubaified, for want of a better word, but they're incredibly popular. And you can get excess of 6% yields in places like this from not just Emiratis, but from overseas English, Americans, Chinese, and people that are living and working within Dubai. And then, of course, you've got the apartments, which run sort of Dubai West, Dubai Central, and of course, up towards the Old Town and towards Sharjah. So there's not that much land in these locations. The land here, especially for the big developments and where you see the international cities, is where we think the majority of sort of big, mass-scale development is going to go on. And whilst that may sound good and it may sound bad, in Dubai, mass-scale development is built very, very quickly. It's not like London, which is our predominant market, where it takes 15 or 20 years to build 10 or 15 blocks. Those blocks and those buildings are built within a matter of years. And what Savills can do is work with you on both the off-plan side of that, but also on the completed side of those resorts and those developments outside of the city, but also the apartments that are already completed within the city. What's happening in the Dubai market at the moment? Well, residential transactions are going up. You can see that it's sort of an upward trajectory. And of course, you know, as you go back prior to that, you know, it carries on relatively the same trend. That's because of the population and the influx of people. That's set to continue. You know, all of the developers there are very well capitalized. Dissect is worth tens of billions of pounds. You know, they fund all their developments themselves. Same with Enquiry is backed by the government. You know, they're not taking bank loans to build these projects. So what happened in the financial crisis was they massively overexposed as the market companies like that were in their infancy, and that's how you get caught. You know, when the banks want to crawl about their leverage, or you can't get any more to complete your building. So that's what happened in the GFC. We don't think that that's going to happen again because of the strength of the developers that are in control of developing the city. So it's a very different time, but about 10,000 new homes you can see on a monthly basis. Capital value trends. Now, it did dip, and it had been dipping for quite some time before COVID. It wasn't, you know, Singapore or Hong Kong of the past, but it is, we think, Singapore and Hong Kong of the future in terms of capital growth. High-end apartments and villas, as I touched on earlier, places like Damac Hills, Arabian Ranches, really popular in that part of the world because, as I said, everybody drives, the highways are much bigger, the traffic is much less, it's a lot easier to get around and get from one place to another. So having a house with a swimming pool on a golf course with complete security is very appealing, not just to Emiratis, but people from all over the world, people including myself. So personally, I feel like villas and townhouses are probably the way to go in this market, as opposed to, you know, apartments in huge sky-rise buildings. As I said, it dipped somewhat from 2014 all the way. I mean, it took a recovery after the GFC, but then it started to slowly tail off until 2020, until, you know, there was political uncertainty elsewhere in the world, and until people started to realize and understand that actually Dubai is fantastic place to live, but also to do business. So we see that trend continuing. Here you can see capital values. These are apartment developments across the Palm Jumeirah. It witnessed one of the highest half-yearly price growth anywhere in the world. Villas and townhouses remain the most sought-after development type. The strong demand for end-use and investment has pushed demand higher than availability across established locations. Again, I touched on those locations earlier. Arabian Ranches was one of those. You can see that in the orange there. But the Palm Jumeirah, to a far out shoot as well. As I said, there is a new palm, the Palm Jebel Ali, which is just further down the beach in an area. Rents have continued to grow in line with capital markets. This is a really cool chart because it tells you all of the cities all over the world. It's not looking great for Shenzhen, but it is looking great for Dubai, Berlin, Singapore, and Lisbon. Now, whether that's sustainable remains to be seen. I think it's a lot more sustainable in somewhere like Dubai than it is in Singapore, and our research points to the same thing. So we can provide you more information on all of these slides to anyone that wants to look at them in more detail. We can share with you after the presentation, so don't worry about photos or anything. Rental value trend, much in line with the capital appreciation. As I said, it recovered after a big drop in the GFC quite quickly, but it took time, you know, 10-12% a year, like a lot of global cities. Then, due to the oversupply, went down. That oversupply was then realized, which is what happens in markets. The cure for high prices is high prices. Supply comes down, demand comes up again. Well, demand is now through the roof, and again, we can put that down to many reasons, but the reason why there's, you know, 30 or 40 people here tonight from Hong Kong. If you imagine all of the countries in the world that are looking at places like this because of the capital growth, we see that that's set to continue. And this is rental. Again, just another slide to hyphenate what we were saying. Again, I'll provide all of this with you, but give you a second just to absorb that. The year-on-year changes from villas and townhouses, you know, pretty impressive rental increase. You would see that rental increase now, and the prices haven't necessarily dictated those rental increases, which is why yields are so very strong in Dubai. But more importantly than that, the voids are very small. So our Savills office take care of the rental and the management, saying that every time something comes onto the market, it's absorbed before they have chances to take viewings. There are so many people waiting, and they know what they get at Arabian Ranches, they know what they get at the marina, because they've seen the other houses that are available there. So when something comes available, it's rented very, very quickly. And I think more important than yield is void, because there's nothing worse than an unrented apartment. Why invest in Dubai real estate? Well, firstly, it's pegged to the US dollar, like we are in Hong Kong, so that's really important. You know, people look at Vietnam, they look at Thailand. These are all good options for lifestyle. But from an investment perspective, in the world we're in now, and perhaps the world we're going into, what you want, as well as strong yields and strong capital growth, is capital preservation and security. Well, when you've got one of the richest countries in the world, being the United Arab Emirates, and you've got a peg to the US dollar, which, you know, it's arguable that in 10, 20 years' time, the US dollar might not be as strong as it is today. But with the petrodollar and the way things are at the moment, I think, well, with the more uncertainty, the US dollar will go up. You can argue till the cows come home about what will happen in the future when all fiat currencies die one day. But right now, and for the period of time that the investors or owner occupiers in this room are concerned, the US dollar is the best currency to be paid with by a long way. Simplifying cross-border transactions is hugely important. Providing certainty for businesses and investors, again, backed by the government, promoted by the government on a very aggressive scale. So they're very welcoming. And just to hyphenate that welcoming, there's zero tax. There's zero tax when you buy, there's zero tax when you rent, there's no tax when you sell, and there's no tax when you pass on and pass your assets to your loved one. And it's the only place in the world that has that sort of pull and drive and security and safety and desirability that then doesn't tax you at every single step of the transaction. Now, I don't necessarily think taxes are bad, but I think overtaxing people is bad. And I think a lot of countries in the world, especially where our bread and butter is made in the UK, are at real risk of overtaxing capital, and capital goes where it's best treated. It doesn't stay and get overtaxed, that's for sure. Green cards, so golden visas, not green cards, but it's the same thing. So once you spend 2 million AED, which is approximately $500,000 US dollars, just over, right, you get a 10-year visa. So for you and your family, your wife, your children, even your domestic helper, you go for 10 years, no questions asked, work, live, enjoy. You don't have to stay for a week, you can stay for a year, it's up to you. There are no restrictions. Once you invest that money and you have a medical, and you buy health insurance, you are then a resident for 10 years. A nice insurance policy, if you like. And we can talk to you much more about detail about this. We can do the process for you with Savills and our Savills offices and our solicitors in Dubai and in Hong Kong. So all of this that I'm telling you is all turnkey. We can do it all from Hong Kong, whether it's the purchase, the rental, the management, the visa, the mortgage. We can do all of that from this room, essentially. Free zones benefit for foreign investors. Now, I'm not sure that this is as huge as our Savills office believe it is, but there's 40 multidisciplinary free zones in which expats and foreign investors can have full ownership of companies. You know, so unlike Thailand, if you want to go and start a business, you have to have a local that owns 50 or 51% of the business. It's not the same in the UAE, and they've recognized that if somebody wants to bring a business and has a value add, then they're going to want to own that business, not put a trust in somebody that they've either just met or not get married for the wrong reasons, right? They think about this and they're a very long term. A little like China is, different to China in many ways, but a lot like China in the term that they're trying to generate generational gains. They're not trying to look at the next 3 or 4 years like in the UK and the US and many other places because of the political system. They're looking at long term because it's ruled by the ruler, and they understand what it takes to get capital in. So our office in Dubai, I think this is huge. Again, I won't read them all to you because that's a bit boring, but I can provide this to you. These are the options. These are the advantages. And it saves businesses considerable time and effort. Real estate bubble risk. This is huge. Dubai's at the bottom of it. This is from UBS. Everyone has their opinions on UBS, like they do with everybody, but you know they're pretty accurate when it comes to their research. And this is, you know, this takes out of the equation black swan events, wars, you know, whatever you want to consider, but it does put in so many different factors into their model of how they create this. And again, I can talk to you about it in much more detail because we work very closely with UBS ultra high net worth clients, so we get a lot of back and forth with them. But you'll also notice that London isn't high up on that list either, down in 16. So the places at most risk are up here in the time. Hong Kong being one of them. Visitor performance by source market. Okay, yeah, this is interesting. This is, visitors. Who's coming? Where are they from? Now, I think it goes without saying that there's going to be quite a few people from Russia going for obvious reasons over the last few years. But the rumors that it's 90% Russian and 10% Emirati are simply not true. I have many friends that live in Dubai that worked with me at Savills and Jones Lang LaSalle over the years from London that have moved out over the last few years, and it's somewhere that when I lived in England, said, "Well, I've never lived in Dubai. It's too hard. It doesn't make sense." Blah blah blah. Now I visited numerous times over the last 5 years to see them and to see our Savills office and to learn more for this presentation. And it's absolutely somewhere I could see myself and my family living now. The changes that I've personally seen in the last 5 to 10 years make me really excited because I don't see the same changes and I don't see the same potential for other places in the world. And I travel all over the world to find projects to bring back for people like you. But I invest in them myself, And at the moment, I'm not investing in other places, but I'm very interested to invest in Dubai. So not that that matters, but that matters. 20% of people from Western Europe are buying in Dubai. Well, 5 years ago, that wouldn't have been the case, in my opinion. And 10 years ago, it would have been a few footballers buying in the world and the Palm, and that was about it. Okay, so it reinforces its position as a major global economic hub. And I think that harks back to where it is in the world, right? London is the financial capital of the world because you can trade with New York in the morning, Hong Kong in the morning, or Beijing, Tokyo, and then New York in the evening, right? So it makes sense for it to be the Forex capital of the world or the finance capital of the world. Dubai is much the same, except you pay no tax. So it's a lot easier to attract talent, especially from places that are stupid enough to have just left the EU, right? There's people in these jurisdictions that will probably be quite tempted by not only the infrastructure that's there and the tax breaks that are there, but also the quality of life and the safety that's there. Education, top 10 globally for reading skills. Now, whether that's going to make it bar or not today, I don't know, but it is important, and it's really important for me. As I said, I've got 3 children under 5, so the schools that are there. One of my friends has his son in the Royal Grammar School and absolutely loves it. The quality of education that you get there is phenomenal. The diverse mix of cultures that you get there sets children up very well. But most importantly, it's very safe for those children, and I think that's going to become more and more integral as life goes on, right? It's not going to get safer in many places in the world. Now, whilst that's not particularly nice to hear, people will look for jurisdictions and for governments that protect their citizens and their children. There is no question in my mind about that, and people will be willing to pay a premium. We talk to people every single day, hundreds of people every single week, and at the top of their list is security of both their capital, but of their family and their person. Right? So if you're looking to secure capital, what you want is low tax and you want security for your family. Well, there's literally no crime in Dubai. And if there is crime, those people are punished or they're removed from the country. So that creates a nice environment. Yes, some people claim it's a little bit characterless and soulless, but I would claim to those people, have you been recently? Because it isn't. It perhaps was when they were developing and building it. But these days, it's a really fantastic place to be, not just for an individual, but for a family. Okay, how is Dubai real estate compared with major global cities? Well, capital value growth very well indeed, only surpassed by Miami, and I think that's just because so many people in the US are so fed up of being overtaxed that they moved down to be with Ron DeSantis in Florida. And Miami is the best place in Florida, so that got a real boost over the last few years. Now, people may say the same about Dubai, and they've certainly said the same about Singapore, what with the China and Hong Kong connection, but I think that's a fairly telling chart. I'm not sure that Miami is sustainable on a 1 year 25% level, but 10 is certainly sustainable for Dubai. Six months to June, rents first, 11%. Yeah, I'll give you a little time to absorb that chart. Very important. Cost of buying, cost of holding, cost of selling. The usual suspects at the top, very, very expensive places to buy, but for obvious reasons, right? They are controlling prices. And I think Dubai is in its infancy in terms of an economy, but also as a place trying to attract talent and investment, that it's not going to do that. You know, I don't know that for certain, and I would never ever promise or guarantee that, but we at Savills are, you know, we advise the UK government, we talk with, you know, the Emiratis, we know what's coming. And they're certainly not planning on putting capital controls and price controls in or changing any of the stamp or tax measures at all. This is not on the radar. Now, whilst I know the Fed said they weren't even thinking about raising rates, and they did, so you can't really trust what people tell you, but the reality is it's not in the best interest of the Emiratis or Dubai's growth to do what Vancouver have done and say, right, no more foreign buyers. Well, there's not enough Emiratis to sustain the place, so they're not going to do that. And they're not going to put a 30% stamp duty on like we have or Singapore have done, because it doesn't make sense, because capital goes where it's best treated. It doesn't go to Moscow, that's for sure, but it does go to something.
What currency is this?
$2 million US. This is buying a $2 million US.
I'm surprised to see Shenzhen at the very end.
Yeah.
I understand that.
Well, that's from, it just means it's low tax. It's not the end. Well, it's better to be down this end than that end for this chart. Not on all of them, but this is where you want to be down at this end. Lower tax. And just to give you all, the dark is the cost of buying. The yellow is the cost of holding. And the light blue is the cost of selling. So stamp, income, capital gains. And again, I can share this with you all so you can look at the different cities. Now, top purchase nationalities from 2012 to 2022, you'll start to see Chinese, and Chinese is Hong Kong and mainland China, but you'll start to see a lot more. I mean, if you look back, it was exactly what I said. It was Russia, Saudi Arabia, it was Iran, it was Pakistan, it was a bit of UK, India, of course, overseas Indians, huge population in Dubai, a lot of the most successful businesses, overseas Indians, and UK. Always been fairly profitable, and now even more so. The Chinese fairly steady, 4th, 5th, 6th biggest buyer in UAE. Exactly the same chart, but just by Reuters, not by Savills, so you can see that we're not lying. Inflows of high net worth individuals is quite interesting. I won't break it down because it takes long, but it's 2022 actual net inflows of 5,200 high net worth, up to 300% compared to that of what it was in 2019. Okay, some of the most expensive transactions, just to give you an idea, a bit of a scale, I guess, because if you're very new to it, well, what do you get for 2 million AED? What do you get if you want to buy something super prime to live in? What do you get if you buy a studio on the outskirts of town? Well, here's the answers to the second one. It's 163 million to buy something in the Royal Atlantis residence, which is right on the top of the Palm, where they have that huge water park. It's a fantastic place to visit, but I probably wouldn't want to live there. But it's personal. At the same time, then we can get the 118, which is AED 22 million, closer up towards the Burj Khalifa in Business Bay. And these are some of the most prominent transactions that have been done by Savills in the last few months. The Atlantis is just about here, looking back onto Dubai over the Palm. But this is really the most expensive real estate. These villas, there's apartments, there's apartments all down there, but predominantly you can buy pieces of land and you can build your villa. Obviously, you know, with pretty stringent planning, you can't build it like you can at Red Hill Peninsula, for example. The giant casino Wynn is expected to gain a license in UAE soon. That's now been granted, so the Wynn casino are going there. So Mr. Wynn, who's done a pretty good job in Macau and in Las Vegas in terms of creating wealth for himself mainly, but also for other people, and the real estate that has surrounded it. You know, if you were to buy a flat in the Wynn residences anywhere in the world, just as they were getting their license, you'd probably do quite well. And I think the same applies here. So again, we don't have any predictions or what we think prices will do from it because it's never happened before. But I'm looking to buy something here, rather than to buy something next to the Burj Khalifa or in Business Bay or in Palm Jumeirah, where, you know, it's not cheap. There's a huge amount of demand globally for these assets. There's obviously going to be a huge amount of demand for these assets, but I think if people can get in at the ground floor of something off plan in 1 or 2 years' time, near some sort of formidable infrastructure change like this, it stands to reason that they're probably going to do quite well. Yeah, but it's not just tourism. It's not just water parks and hotels with shark tanks in it. That was the gimmicky stuff that attracted people. The reality is, because of the tax incentives and its location, there is a lot of real business. There's a core economy developing in Dubai now, and there's a lot of big businesses moving there. So, yes, growth predicted is to grow 15% in the next year, but we can also look. The return on other investments is pretty attractive, whether it's retail, whether it's grade A offices. People are making money, and the reason people are making money is because people are moving there and they're taking up the space. This wouldn't be possible to attain these yields if all these offices were empty, which was what we heard, which was what the story, that was the rumours, 10, 12 years ago. Yeah, they're building buildings and no one's in them. It couldn't be further from the truth. We can show you that because we have offices on the ground that are leasing these offices and leasing these residents.
Is a net of management?
No. Gross.
That's very expensive.
It depends on the building. If you're in a prime office and your gross is 6.75, 7.2, you could probably net 4 or 5. Well, it's 2% more than you can net in Hong Kong and 3% more than you can net in London. And they're who you're competing with, right? So yes, I agree. But it's more than a fixed deposit in a bank, but you also get the capital appreciation, and that's the angle that we want to focus on. The rental yield is great. The rental void and lack of it is great. The capital appreciation is what will potentially change lives over the next 5 or 10 years. So good question. It's gross. There's a picture of Dubai. Okay, so we like Volta. I say we, my team. It's on Sheikh Zayed Road. It's right in the middle of Business Bay, Burj Khalifa. Good drawing, tallest building in the world. This is a hugely popular, very, very well-developed area close to the Dubai Mall. It's complete. There is no building site. There is nothing going on. There's sparse little plots of land where people like the Mac build big buildings like this. This is, in our opinion, one of the best ones. We can talk to you about that and also about Privé later. Well, really, we can talk to you about any of them. And then this is what I was talking about earlier. You have the international city at the back, and then as you come down here, you've got various golf courses, but you've also got huge villages that are, have golf courses and infrastructure and shops and supermarkets, and they're full of families, overseas families. And they're slightly further back, but because you've got brand new immaculate highways all over the place with 4 lanes either side, it's 15 or 20 minutes drive into work in the morning, and that's where people would prefer to live, as opposed to Hong Kong people just like myself who want to be above an MTR in central. It's a slightly different life in Dubai, sports, outdoors, golf, etc. Okay, just to get your bearings, this was what I was talking about with the Volta. This is accurate. We're not sort of superimposing anything, and I won't spend too much detail talking to you about the individual developments that are going on at the moment, because there are a few. But what's nice is there's not hundreds. It's not like London or Hong Kong where you're going to be absolutely inundated with 500 brochures and millions of floor plans. The reality is the oversupply issue isn't there anymore, because whenever buildings are released, they sell. Very, very quickly to both Emiratis, to Indians, to English. They don't need to come to Hong Kong, and that's why you don't see roadshows in Hong Kong every week for Dubai like you do for London, because there is no need. They sell them, and that's, again, it's a good sign. These are, I won't go through these individually, but I will flick through them slowly just to show you the type of quality that's on offer. If you think Sun and Kai, you won't be far wrong with the Demac. The quality of, I don't want to name names in case anybody owns or lives in these developments, but in Hong Kong, you have some good developers and you have some that build masses and masses and masses of real estate and own the welcome supermarket, and they're not so good in terms of quality. But in Dubai, it really is London quality real estate because of the regulations put in place by the government. But because the last crisis in 2008, there was big problems with build quality, with slave labor, with all sorts of terrible things that have really, they've done an excellent job of getting up to standard, both in terms of build quality, but also human rights and livability. That, again, that's why I feel international money is much more comfortable, including myself, to invest there. This just tells you a bit more about it. We have branded residences on our database. They start at US £336,000, but again, they're freehold. They complete in a couple of years. There's only 350 over 2 towers, but you're right in the heart of Central, and you're paying $330,000 as opposed to $3 million across the road here. But same sort of location, comparable to living in mid-levels, $300,000. Of course, you're not getting a 3-bed flat for that. But you are getting a 500 or 600 square foot one bed, and that will rent for a 5.5% yield. So for $300,000 US, you're putting down 10% there or thereabouts. You know, it's a compelling opportunity in terms of risk reward and then return on investment. If you believe that the Wynn Casino adds value, if you believe that the Palm Jebel Ali will be in demand, if you believe that Dubai is an attractive place, then these are the sort of things that make sense to me anyway. And there, just to give you an idea, the studios are 445 T2 and they start at 1 million, so 1.2 million, I should say, sorry. So it's $700 US per square foot for this type of build quality, you know, marble everywhere, which is very Emirati, but you don't have to have that. You can change and have options, especially with developers the size of the map. Yeah, this is exactly what it looks like. Two big towers on the water next to the Burj Khalifa. So again, talk about these with your brokers more. They all come with warranties from the developer. They all come with leasing from Savills. They all start at about the same sort of price. Okay, buyer's guide. So buyers identify and choose a property that suits their circumstances. They prepare a document, passport or Emirates ID. So the buyer agreements can re-reform. We have all of this here. So you can take a look and absorb that. You can take it away to do your own due diligence on it. You pay a booking fee then, which is usually 5% of the purchase price, and a transfer fee being 4% of the purchase price. Include a sale and purchase agreement, and then an advance paying of 10 to 20% is taken. Obviously, that includes this. There's no commission payable. And then stage payments throughout construction will be required. So it depends on whether you're going to get a mortgage, which again, we can help you and we can provide you with, or it depends whether you're going to finance it in cash, in which case, no problem, pay cash. But mortgages are available, both for Hong Kong citizens, for Indians, for English, wherever you are in the world, they're actively lending, and it's banks that you would be happy to take money from, not banks that you've never heard of. Okay, so as it says, obtaining rejection of a certificate from the bank and a payroll from the developer, and a certificate of transfer will also be required if the mortgage is required. The MAC and Savills will do that for you. Buyers pay the remaining established amount, and then buyers take ownership of the property. It's that easy. You don't have to go through your bank statement like you do in London and Australia and tell them what the $4 were you spent 16 years ago went on. You know, there's none of that. You know, and look, people will argue that that's good and bad. In my opinion, that's very good. That doesn't stifle investment. It doesn't slow it down. And the KYC and AML requirements that you have in places like the UK, they don't stop people from money laundering. They make it harder for the average person to invest. It's really just another hurdle and more bureaucracy, in my opinion. But we can also have a discussion about that at any time. And I want to be very clear that whilst I'm interested in Dubai and I really like the opportunity and the excitement of Dubai, it's not the only place that we're looking at. And it's nothing against the procedures that are in place elsewhere. I just think the freedom and the ease of the transaction is going to attract a lot of people. That's why I keep highlighting it. I'm not accusing anyone of money laundering. Buying costs here. So you can read those for yourself. And then the running cost, which is very important. Lettings is 5% of the rent per annum on average, and it's covered by the tenants. Management fee is 10%, as you were talking about, of the monthly rental amount. But if you're buying a brand new development that's insured and covered by the developer, what are they managing? Your tenant. So you pay the 5% management fee paid by the tenant for the rental. Nothing. Unless you want to have the management, in which case you can, and Savills can take care of that for you.